You're welcome back. The total number of commodities traded on the AFEX exchange dropped by 82% for the weekend at the 4th of October, where SCI and AEI were unchanged. As usual, we have Michael Martins, portfolio manager at AFEX, joining us for the details. But Michael is not at our Abuja studio today. I think he's somewhere doing work and having fun. Hello, Michael. Good morning.
Hi, Henny. Good morning. It is always a pleasure to be here.
Yeah, good to have you too, Michael. So bring us up to date on happenings of the week to the 4th of October.
All right. Thank you very much, Eni. So just to give you a summary of what happened on the exchange in the week under consideration, the total value of transactions traded on the exchange fell by 82% from 834 million naira to close the trading week at 148 million naira. And the total number of contracts traded on the exchange also fell by 22% from 7,701 contracts to close the trading week at 5,980 contracts. We, however, saw a slight increase of 18% with the number of deals from 33 deals to close the trading week at 39 deals. The ACI, which is the AFEX Commodities Index, and the AEI, which is the AFEX Export Index, both remained unchanged at 427.34 points and 168.08 points, respectively. With regards to the volume of contracts traded on the exchange, we generally saw a slight increase, only with sorghum, which went up from 0 contracts to trading 4,625 contracts this week. With regards to other commodities on the exchange, we saw a decline in the volume of contracts traded, with paddy rice falling from 3,352 contracts last week to trading 387 contracts this week. We also saw a decline with soybean, which fell from 1,493 contracts last week to trading 872 contracts this week. And lastly, we have maize, which fell from 2,370 contracts to trading 21 contracts this week. With regards to the price changes on the exchange, we generally saw grain with sorghum and cashew nuts, with sorghum going up by 9.17%, gaining 1,865 naira in the contract value to close the trading week at 22,205 naira per contract. And we also saw grain with cashew nut, which went up by 2.42%, gaining 1,076 naira in the contract value to close the trading week at 45,576 naira per contract. With regards to the rest that we saw on the exchange, maize was the major culprit, which fell by 11.99%, losing 2,741 naira in the contract value to close the trading week at 20,121 naira per contract. And lastly, but certainly not least, we have paddy rice, which fell by 1.67%, losing 366 naira in the contract value to close the trading week at 21,498 naira per contract. So those are largely some of the biggest changes in price, volume, and also in terms of the summary of what happened on the exchange in the week under consideration. And as we always mention, and if you want to know beyond what is just spoken in this show about the commodities market, you can always go to our website, which is www.afexnigeria.com. And you can always download our app if you want to get started trading commodities, which is available on iOS and also on Android.
Markets in the third quarter. The third quarter has ended just at the 4th of the year, including factors that might have affected the market. Let's look at also the outlook for next quarter, especially with the new season and the harvest, still on. How would you say the commodities market performed in the third quarter when you compare it to the second quarter and the first quarter?
Thank you very much, Eni, for that question. So I think the general dynamics of the commodities market is pretty much clear at this point. So usually in the first quarter of the year, that's when you essentially have a whole lot more demand and you still have a significant portion of supply into the market. So you tend to see prices rise in the first quarter of the year. Some of that also continues into the second quarter. And then you start to see a general decline in the commodities market in the third quarter of the year. What we can say from the data that we have on the exchange for this particular third quarter in comparison to the previous quarter is the fact that price changes are generally uneven, right? So if you look at commodities like maize and paddy rice, they both fell by 3% and 5% respectively. However, due to the scarcity that we had for other commodities like soybean and sorghum, and also due to the increased demand that we have for these commodities, the prices went up significantly by 16% and 21% if you're measuring the changes quarter on quarter. So as I said, right, prices are generally uneven in the quarter under consideration. If you look at the export market too, for the most part, prices were tapered with very little movement in either direction. Just to use the indexes that we have on the exchange as a proxy, so the ACI, which is the AFEX Commodities Index, fell by 9% this quarter. And then also the AEI also fell by 12%. And that just gives you a general idea of what is going on in the commodities market in this quarter in comparison to the previous quarter. So prices generally have been uneven. The sentiment is that prices have been falling, particularly for export commodities, and then also for some of the major grains that we have on the exchange. So those are largely some of the dynamics that we've seen play out on the exchange.
So what drove the decline in prices of most of the commodities?
So two things, essentially, right? I think the first thing ideally would be that in the third quarter of the year, everybody knows that most of the commodities are out of season. So there's generally a low demand for commodities around the third quarter of the year. So usually most of the companies that need to buy these commodities have done so in the first quarter and also the second quarter of the year. And I think another major issue that would have contributed to falling prices is also the fact that we are having the onset of harvest. And then for some of these commodities too, a lot of them are coming to the harvest, are harvesting these commodities much earlier than we expected. And that would ideally also speak to maize and paddy rice, which is why their prices are falling significantly this quarter alone. So those two things generally, the lower demand that we have for commodities, and then also the anticipated harvest, and also the actual harvest that is happening for some of the commodities on the exchange.
And how is the exchange getting ready for the new season? Also, are there insights into how this could help to boost food security in the country?
So thank you very much for that question. So in terms of what we have done in anticipation of the new commodity season, we have spoken in times past about the EP financing program that we did this year. So this year we're able to almost double the number in comparison to last year, doing an approximately 65,000 smallholder farmers. And that has implications both on farmer productivity and of course the eventual volume that we expect to be traded through the exchange. So that's that on the smallholder farmer productivity side in terms of also production. And then we also have, also on the exchange, we've significantly increased our storage capacity by more than 70, going on 80%. And that increases our ability to serve multiple players across the agricultural value chain and provide storage as a service, to those players, whether that's the smallholder farmer, the processor, or maybe even the trader, whichever the case may be. And lastly, but certainly not least, we also have the Asp Program, which is a program that we essentially developed to sort of empower small and medium-scale agricultural entrepreneurs, to sort of empower them to replicate AFEX's activities of smallholder farmers. And we believe these three things, right? So productivity, storage, and then also empowering small and medium-scale, entrepreneurs are essentially things that will bring us to the point of being food secure as a country. So these are some of the things that the exchange has put into place from a physical perspective, and we believe that they would contribute in a significant measure to making the nation more food secure.
So what's the outlook for the market in this fourth quarter?
So like I said last week, right, we are expecting a significant production number this year in comparison to last year due to the fact that we had higher prices, and then that essentially incentivized smallholder farmers to cultivate a whole lot more this year than they did last year, in order to take advantage of those higher prices. But we are also taking a look at some of the other factors that could potentially, affect the commodities market, which is ideally the exchange rate. The exchange rate crisis that is currently going on in the country, and then also the insecurity issues that we have in the country. So with regards to the exchange rate, we speaking about the fact that there is a very strong correlation between what happens in the exchange rate market and then also what happens in the commodities market. And that's partly due to the import parity issue. And the insecurity issue too could also affect the movement of people, goods, and then also maybe most importantly commodities, from one place to another. So in terms of outlook, we can't say anything definitively now until, of course, we get the actual numbers out. But what we are also most concerned about in terms of the fundamental factors that could affect the market is also rainfall. So we are expecting the rainfall to start, to stop in earnest, so that people can small farmers can essentially start drying those commodities, before they start selling. And all of this would ideally feed into one major thing that every single participant in the commodities market is looking at right now, which is basically price. We are hoping, best case scenario, that those prices correct significantly before the start of the new harvest season. because that would have implications on the nation's ability to also be food secure and then also the purchasing power of the average Nigerian. So we do expect those prices to fall. Whether or not they eventually do, we can't say definitively yet. But all these factors would essentially contribute into what we see play out in terms of prices on the exchange or even in the commodities market.
All right, and what else does AFEX have planned for this new quarter?
So the truth is this, right? We've at different points in time, right, spoken about the variety of different opportunities that are available within the commodities market, and then how different participants can sort of partake in that. So we believe that for the most part, what we're going to be doing in the fourth quarter of the year is a lot of market education, right? So to essentially educate people about the opportunities that they can avail themselves to within the commodities market. So we're going to be doing a lot of that in the fourth quarter. We also have the ABCP program, which we're launching, which is essentially a financial product that helps raise, finances and capital for processors within the agriculture value chain. We also have, spot contracts which are due to go live in the month of November, which essentially allows small and retail investors to partake in the commodities market. And like I mentioned last week too, we have made these spot contracts cheaper so that a lot more people can participate in the market. So we've made them from 100 kilogram to 1 kilogram, meaning that the average spot contract, which used to be worth about 20,000, per contract, is now worth an approximate 200 naira per contract. We also do have market makers that we are onboarding and some that we are fully onboarded to just sort of also help with the liquidity on the exchange. So these are some of the things that we have put into place for the fourth quarter of the year. And we are anticipating a great commodity season. We are putting all our eggs, I believe, in the right basket, and we do expect to have a great commodity trading season.
Yeah, well, we're looking forward to that exciting quarter that AFEX is promising. We look out for those things that you have said, Michael. Thank you so much for joining us. Michael joining us from Abuja, even though he's not in the studio, is a portfolio manager at AFEX. Enjoy the rest of your day, Michael.
Thank you very much, Amy.
So let's move now to the market where we'll have Will standing by. But first of all, we'll just take a moment and we'll come back. We'll go straight to the markets.